Equity mutual funds are direct stocks. Which is a better option to invest? And what is the comparison between these two? Our chief financial planner, Mr. Ramalingam, will give insights on this. Ramalingam, over to you.
Both options are in front of you. I'll give you pros and cons of both. One is where you are opening a demat account and you are directly investing in stocks and building a portfolio. In mutual funds, also you are investing in stocks. Only thing is you are not deciding which stock to invest. You are outsourcing it to a mutual fund manager. Mutual fund manager is a professional who have 24 into 7 access to the market information. Also, he has a team of people who can assist him to take right investment decision. Right. So that way, mutual funds have better expertise, better resources to take right decision. They also have time to advantage. You see, suddenly market is crashing by 2000 points in a day. Russia-Ukraine war announced. On that day, we may have to buy or sell some stocks in the portfolio. On that day, like we have a high-level meeting in our office, we may not be able to open our broking account at all. Possible. So if you outsource, they will take care of it. You need not worry about it. Another advantage of investing through mutual funds is diversification. Even if you have got monthly 1,000 rupees or you are doing a one-time investment of 10,000 rupees, you will be able to invest in 20 to 30 stocks when you are investing through a mutual. With just 1,000 rupee monthly investment or investing 10,000 rupees, you will not be able to invest in 20 30 stocks in direct stock portfolio. So that is a disadvantage with investing directly in stocks. And when you are investing in stocks, there is one more additional risk which we have to understand is stocks can go to zero. A stock, if it is not performing well and the company is getting delisted, then the price can go to zero if the company is getting liquidated. When you are investing in a mutual fund, even if it is an equity mutual fund, practically the NAV will not go to zero because if they are investing in 30 stocks, the entire 30 stocks will not collapse and become zero. Can give you 50%, 60% negative return possible. I have invested 1 lakh, it has become 40,000 possible. In rare cases like 2008, 2020, the year 2000, it has happened. But even in those worst situations, it doesn't become zero. Even in those worst situations, an investor who have invested, waited patiently, made money. So going to zero is not possible in a mutual fund, but it is possible in stocks. So diversification, stocks going to zero, or having a professional fund manager when you are investing in a mutual fund, saving time, or good resources to take right decision. These are the advantages of investing in a mutual fund. If you think you have time to your advantage, the expertise is available to you, and you also have better resources to decide, then you can experiment stocks. But you have to be extremely cautious when you are investing on your own in stocks.
Thanks for your detailed answer.
If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.